Good afternoon. It is October the 7th, 2015. Time to recap today's trading. Okay, our first seller order area excuse me, was 85 to 90. Our buy zone was 70 to 75. And we thought the market would trade up first and get stops above 90. Then after that we didn't know. And a great 10-minute trade to the long side came right here off our red on red, blue on blue trades. This blue, that buy right there all gave you small profits. If you'd held them, you could have gotten upwards of 5 points. If you didn't hold them, 3 was about it, 2 to 3. So the market did make its high. It came down. The short came off of this head and shoulders pattern. This head and shoulders pattern is the strongest pattern we've got, period. And if you got short in this area, it was a fabulous trade. Got short again in this area off of either of those two S's, another fabulous trade. Then we go into chop. Good trade here off of that low. Retest failure, slow rollover, retest failure, slow rollover up that way. Then depending on where you had your stop, this B right here could have been a loser. Those B's would have been successful. So pretty good trading day, and looks like we're going to close in the 1980 area. High of 1990, low of 1968. So a close at 79 would be halfway through it. I still think this market is headed up and looking for stops above 2,000. And the worse the economic news, the faster that's going to happen. So what does it look like? Outside day. There's your K. There's your trading range. There's your move out of the middle. So this one says trading range. And again, just looking right here, if we get through 2000, 2009, the spill from 25, then we have this R here, that K period low, that KLM period low at 37. Say basically 2010, 2025, 2035. That's where the market will look for resistance. So we're holding the gains. We haven't broken, we haven't spilled. So what's the easiest trade to see? Let me separate out the day session. It's another move out of the middle. It's going to be failure to take out the 85 to 90 area. Last rotate up was 88, then 84. So we're going to keep our sell the same place, 85 to 90. And we're going to play 95 to 2000. On the buy side, 70 to 75 looks reasonable. Then our 60 to 65, pretty much where we were today. Tomorrow's news, jobless claims, 271. That's kind of the default. Right now, 270, 275. Bloomberg Consumer Confidence Index. Last month was 43. Natural gas inventories should be pretty close to 195, give or take. And then beige book. Or FOMC minutes, not beige book. And they will look at this to see how worried they are about the economy. Okay, tomorrow's the 30-year auction. We've had two very, very strong auctions. The toughest piece of paper to move is 30-year paper. So I imagine we're looking at a trading range market, but weakness will be bought to support the 30-year. Safer way to trade that is to trade the knob spread. So here we are. Here we sit. Outside day that's got trading range written all over it. And we're just kind of trading in the middle right now. And we have a P in a down market with volume below time. So somebody's covering their shorts. And what do you mean? Why are they covering shorts? They're supporting the auction. They got short before it. They buy those short positions back. So I like our 17 to 21. We had it today. The 9 to 13. It takes a piece of news to move the market. War out of the Middle East, escalation, I guess, is where we'd be lending, and that would tend to make treasuries go up. Sell one will be 27 to 31, then 3 to 7. Like to buy into weakness better than I do the sell into strength. But I think in Globex, the best short will come in Globex or off of London time as people set up the 30-year auction for tomorrow. Okay, well, tomorrow we'll come in and we'll see where the knob spread is. And it strengthened a little bit under today's close. It didn't really take off and run. But that's probably in auction time, that's probably the most certain trade, is to buy the knob spread on the day that the long paper has to be moved. Okay, so here we are in the 30-year. You can see that the knob spread is strengthening compared to the 10-year. Sellers into 158, so 23.27 for Globex, sell 1. Then 31 to 03, sell 2. A little bit stops above yesterday's night session high. On the buy side, last rotate down stopped at 10. Last trade right here looks like we're at 20. We're going to try 9 to 13, buy 1. And then we'll go down to 29 to 01 for buy 2. And we'll play this one a little more aggressively to the long side because of the knob spread. Can't see gold doing anything but staying in a trading range, so selling against 50 and buying against 40 is the play that I see right now. And higher low, higher high today. Now we have a B and an up market, so that's profit taking, right? So the issue becomes, can we retest the breakout and will it hold? So we got our C period low down here, so 40, 42, buy 1. This high volume area down here, 35, 37, 35, 37, buy 2. On the sell side, 49, 51. High volume numbers up here at 54, 54, 56, sell 2. And one of the reasons, once you get into a market and you understand the fundamentals and what the current financial meme is for each market, then you really, your assessment of the market, the context of the market becomes reasonable, not too hard to do. Then you just go to the structure and you pick out where support and resistance do lie. and that really speeds up the process. Now, having watched these markets for years, I'm a leg up on you in that respect. I can do it faster than you can do it. And again, the problem with fundamentals is, are they impacting the market? If so, how? And we can see that on the E-mini, sometimes good news is bad news, and sometimes bad news is really bad news. So on crude, we got this split in the volume up here in this 49.50 area, and you can see we just touched it today, and the market rejected that. We got a pretty strong B. So last rotate up in K and J stopped at 68. We're currently at 47.85. The spill came through 13, so 48 and a quarter. 48.50 sell 1. 49 and a quarter sell 2. On the buy side, we got this breakout in D periods, so 47.25, 47.50 buy 1, and 46.75, 47 buy 2. Several articles out today that the day of reckoning was coming for the shale oil industry. They couldn't get any more loans. And again, when you see the banking industry, they will lend money to any and everybody that has shale crude next to their name, and then they won't lend money to anybody. So they run from one side of the boat to the other, and there's the herd mentality, bragging rights, and the other one is the bank regulators. All of a sudden it's okay. They don't get called for lending money to real estate, multifamily, single family, office buildings, crude oil, shale oil. It's just the way that it works. We'd rather be with another group of people than be right. It's just human nature. And you see it everywhere, especially with government. If the government regulators are after you, or going to get after you, what could be a more consensus-driven arena or platform than decisions delayed for a long time, decisions made by consensus, not only of the office and your superiors and everybody else around you, but adjoining agencies that might be there, and the lobbyists that support whatever it is that's being talked about or being done. So here we are in the $13+ seller, 12 minus buyer. So it's trading range. Well, that's certainly part of it, Jeff. But you don't want to get fired either if you're a regulator or another agency. So if everybody's on the same page and doing the same thing, well, that's what we thought we should do. So 75 is going to be sell 1. 1300 is going to be sell 2. Not going to be too hard to get to 75 in my opinion. 1225 buy 1. And 1200 buy 2. And that's it for October the 7th, 2015. I will see you all bright and early in the morning. Thanks for working with me this morning. My airport trip. We have traffic jams in Wichita at that time. People going to work and west going east. Sometimes we're on the 3 lanes each way or 6-lane turnpike. I was down to 2 to 3 miles an hour in Wichita, Kansas. Can you imagine that? Anyway, with that said, I am out of here.